Ladies and gentlemen, I'm fed up saying brothers and sisters. Boom, there you go. Tuesday, October the 14th, 2025. What can I say? If yesterday was the bullshit edition, today's the calming. Tonight is the calming session. I'm playing some cool jazz, but you can't hear it. I'm sorry about that. As long as the mic works. I am the capitalist voice. I'm in your head. I'm in your ears. Apologies. I am Hugh Hendry. I am also in St. Bart's, which is wonderful. Today, wow. What on earth can you say about a day like today? If it was a cappuccino, it had no froth. It was the kind of market session that it moves in the gaps between the headlines. What headlines? I'd like to think the noise was theatrical. The data, what little data there was, will come to that. The data was sottovoce, Italian opera or theatre direction. It was hinting. It wasn't shouting. Although I'm sure I heard the unmistakable dull, repetitive fed pointing to the inevitable lower rates. Why are lower rates inevitable? I say that because I don't want to break my rhythm, but we have those eggheads. I can't tell you how much I dislike the International Monetary Fund. I've even been in Washington at this time of year when they all gather. I've been there, been on stage, made presentations, been on panels. Bloody useless. But whilst they were cutting French economic growth to 0.7, hey, Deutsche Bank, who are upgrading Europe, really? It's going to outperform the US? Really? Do you know it? Sotto voce. Hinting, not shouting. You're talking nonsense. But at the same time, they held pretty firm on the US expanding around about 2%. Traders, not me, I was busy. You know that car crash from yesterday? That actually turned into a 6,000 word essay with charts and videos going out to my Substackers. I know after, again, that was hard last night. It's maybe not the time to endear myself to you, but come on, support me. Get your ass down to Substack. Or, support the show on the podcast. A lot of effort goes into this. Anyway, if I had been a trader, and if I was watching a screen all day, it was a screen that refused to budge. It was the way a cat. What does a cat do? You know the way cats watch doors? And it's like they're asking you, hey buddy, can you open the door? I want to go in, I want to get out. Mostly I want to get out. We kind of just sat there waiting for something to happen and nothing. Bank earnings, bumper profits, caution. Nothing. The standout was like a 3.5% pop in. Was it Wells Fargo? Kind of higher return on capital standards. Target 17%. I hate to say it, and God, if David Levinson hears me say it, you know the way he just goes on and on and on about the Credit Suisse, largely wholesale funded money centre bank. I don't buy banks, having ridden the hell of 07, 08, having seen again Wells Fargo make an all-time high price breakout in September of 08. I'm like, I can't be bothered with it. But that Citigroup chart, it's a good chart. 15-year price breakout. Still don't trust it, but I'm a cat. That's a door that seems to be open, or it's a door that you can push open. I'm maybe going to play with words here. There's a saying, I was going to say there's an old saying, I'm pretty sure I made this up. I was looking at my letters earlier. Markets don't break when they're scared. They break when they get bored. And so I'm hesitating because I'm suggesting today was really boring, and it was. But these markets are not boring. And the most endearing and perhaps the most bullish component about these markets is that everyone is scared. And I like that. And today was just more evidence of that. Universal caution. Like the banks, the Financial Times headline tonight is, banks caution over bubble with bumper profits. That's why the share prices were modest in their reaction. JP Morgan was down. So I like it when everyone's talking about bubbles. IMF, the Bank of England, the ECB. I like it when those jokers tell you ex post, when the bubble, boom, they talk about the dangers of bubbles. They don't talk about it beforehand, so I kind of like that. I like it when the language of fear becomes commonplace. Is it, oh my God, I can hear the rain. Is it metaphors? Why am I stretching for metaphors? Is it like a yoga pose that's held too long? Everyone trembling, pretending it's balance when the system is straining. System is straining. Is the financial system straining to go higher? Are rates straining? US Federal Reserve rates, are they straining to go lower? Why are they straining to go lower? I mean, I think they're going lower, but why? And there's something, I have nothing to add to it tonight. As a introduction to that, gold was up again. Of course it was. But the oil market, which is the oil market 10 times greater? I'm making it up. I've heard Levinson say it. 10 times greater than gold, a $300 trillion complex. I'm going to do some maths on that. Maths, calculus. I'm going to find someone that smokes and steal their cigarette pack and do notes. Is gold $300 trillion? What would that be? That would be, unlike gold, you would say all the gold that's ever been mined. You wouldn't really say that with all the oil that's ever been extracted because it's been consumed. I guess you would say all the above ground stock, which can't be that huge, but it would really be future reserves of oil. But I think when we get to that 300 trillion made up number, it's more the fractional reserve And fractional reserve is really, I'm using that as a metaphor, but the forward, backwardation, contango, futures markets with options markets create a trading flow, an evaluation of oil and oil-like derivatives, which could be $300 trillion. That's where that comes from. And if it's anywhere in the vicinity of that number, it's 3 times global GDP. And we have this remarkable phenomenon where we're fusing and burning, and I don't know what the right term is, but transforming energy into knowledge. At breakneck speed. Like there are many constraints on this sprint. The heavens, it'll be a sprint over a decade at least to build data centers. A constraint being the energy. I'm going to have to work on this. If I get time, I'm going to try and take notes, but hey, you're listening. Contribute. Let's have a dialogue. DM me on Instagram or Twitter. Give me your thoughts. Why is oil? I think oil's at the same price that prevailed in 2005. Try and find my chart. Yeah, 2005 doesn't look such a bad estimate. Why is oil at $56? Why is it halved since 2022? It's still the world's principal energy source. And we've had this macro phenomenon called AI. Why is it not apparent in the price? What does that say about demand and supply? What about the deviation between the gold price and the oil? And to all of you people who own gold miners, wow, because that's a nice position to be, if you will. Oil is a metaphor for your extractive cost, and yet, which is going down, but you're selling this thing at higher and higher prices. Chapeau, as my French cousins would say. But it's interesting that there was economic data today. Very little and very idiosyncratic. I think there was economic data. I'm scared. I promise you, I've double, triple checked. My digital executive assistants or assassins. Can't believe they fed me that made up figure the other day. I mean, the notion of me doing a daily podcast to talk about data is amusing. I would never have looked at the data as a manager, as an active risk manager. I didn't want to know. I'd be curious about the price reaction 1, 2, 3 days later. But I didn't want to know at the time. Noise! I like signal. But the nice thing is we can celebrate these kind of off-ramp little private sector things that have been around forever. We had the National Federation of Independent Business, the NFIB, the Small Business Optimism Index. And again, this is You've got to join me in abolishing decimal points. Data analysis becomes way more interesting. It printed 99 for September. The headlines screamed, it was a miss. 100 was expected. Or was it? I'm rounding up. Am I rounding up, rounding down? And it was softer than the prior 100. It makes a mockery when you take the decimal point out. Not a miss. Certainly not a collapse. I saw some talk about a hesitation. If it was anything, it was a burp. Small firms are looking chilled. Where did we say it was? It's trading at 100. That thing, it touched like low 30s during the pandemic. Got as high as about 120 with the appointment of Trump 2. Optimism among small companies despite tariffs and China and the social strife and gold at 4,180 and silver breaking out 45 years high and chaos. Business optimism is like, yeah, fine. Business is not bad. Again, caution, fear, tripping over. Journalists trying too hard. The second delight today was, and really we're scraping the bottom of the barrel, but I'm being mean. We had the Red Book same store sales. Red Book. Why is it called Red Book? This thing was compiled by Edward F. Johnson in the 1960s, and he used the Red Notebook to manually organize the retail sales data. Today, I think it's 9,000 retail entities contribute. And guess what? They report this every week. It's a yawn. Oh my God, it's tired. It rose 6% year over year. They say it was a hair better because the week before it rose 6%. I refuse to do percentage points. Boring days read like love letters. The Fed, I mentioned this, didn't I? The Fed, Jay Powell, Jay Boring. He spoke with that priestly cadence, data dependence. Fog. Have you heard of the Tyne? The Tyne, Tyne, is a river that runs through Newcastle, and there's a saying, fog on the Tyne. Instead, Powell keeps talking about fog on the dashboard, fog on the windscreen, but policy is steady. But again, fear, caution. You open the newspaper immediately afterward, and the Fed directing people into we're cutting interest rates. Jobs market. They're concerned about the jobs market. Overall, what did markets do today? They did nothing. Red Book, optimism, IMF, ECB, Bank of England, market and intellectual bozos, administrators, tapping the brakes at every yellow light, pretending that that's what they do. They're cautious people. They're just scared. They don't understand this market. Banks that made good money. American banks, Wall Street banks that made good money but refused to celebrate. I like that. And then, oh my God, a name from the past. I've mentioned this several times that perhaps the origin source was rare earth and Chinese dominance, which was a function of, we'll just have the least regulated, the least profitable version of this model, but we will own this market globally. And they did that in solar panels. Superior technology, or just we just wanted it at all cost. And they did it in cellular base station software control of the 5G network. And where once Nokia and Ericsson were amongst the most valuable companies in the world, they fell 90% like Amazon et al. And never recovered. But Ericsson, and I've got a soft spot. I just love. I asked you, bring up the charts of there's an ADR on both Ericsson and Nokia, or look at their European price charts. Get 30 years, and you see everything. It's quite a sight. Ericsson was up more than 20%. It actually got some strength in wireless, and AI is everywhere. It's now in cellular network demand. Of course it is, I guess. We're using ChatGPT on our mobile phones. Woo! So many memories. Well, I tell you that story. Yeah, I was at I had to do this. I did so many speeches, and one was, I think, 1999, and your best idea kind of thing, of which I never had best ideas. Best ideas is an emotional term. I don't like it. I'm indifferent to my ideas. I bought it because it was going up. I'm a sloth. I don't know why it's going up. I don't need to know. Try and explain this in the 6,000 word letter that I wrote today. Subscribe to Substack, the Acid Capitalist. But I can't say he's a bozo. He was actually a Scottish hedge fund manager, UK small cap, and he was on before me, and he was just like bragging. I've told this story before, but he's like, yeah, no, I spent the weekend in what do you call those things? Eskimos, the cave thing, an Eskimo hut, Eskimo ice cave, with the chief executive of Nokia, which was the largest company at the time, and wow, Nokia's my best dog. And so I was like, I'd be short Nokia. I don't know the chief executive. Igloos! I don't hang out in igloos. Maybe that's why. I've seen the future, and it doesn't include Nokia. And the guy went running off, and he told stories about me. I was mentioning the fact that I managed money on behalf of the Carphone warehouse. Huge customers. I was like, and that was me. I was like, you name drop, I'll name drop. These guys give me their money. They don't invite me to igloos. But I ain't rushing to buy Ericsson or Nokia. And look at those price charts. So, man, boring story actually. Ericsson up 20%. Kind of run about $10 on the ADR. I would have to trade 15, 16. Have to rally 50%. And then it's kind of interesting. You think, what? You're going to buy it when it goes up 50%? Yeah, without hesitation. These things are like call options. The price rate of change when what do I call it? Again, look at those charts. I dare you to look at those charts. Again, to my Substackers and Patreon members, I will present you those charts. And imagine traipsing. What is traipsing? I think is a term for dancing. Um, carefully navigating yourself around the tombstones in the cemetery of those fallen heroes, of those stock and business ideas that ended up being grossly overcapitalized by guys hanging out in igloos. And there's that gross overcapitalization is subject to the inevitable mean reversion and boom, timber, which gets accentuated by everyone jumping out. Boom. Reputation's ruined. No one wants to. Did you own it, mate? Or is it Peter or Paul? I should remember. When the cock crows, hey, aren't you the guy? Aren't you the disciple? Didn't you tell me that Nokia was the best story ever? Me? No. The guy with the beard? No, not me. Today, I mean, I'm like one of those guys. I mean, I wake up from a nap and I can't tell you if it's Monday or Friday. But I have a coffee anyway. And that was today. Today was a bit like that. Today the market needed a nap. Like Friday and Monday were enough. Like we can take the rest of the week off. Just chill, people. I'm approaching the end of this. There was nothing profoundly exciting to say. And I think it's an opportunity to tell you about the macro. I'm trying to keep a straight face. The macro shipping news issued by the Acid Capitalist, 2300 GMT, from the island of St. Bart's. There are warnings. There are many warnings today of modestly rising volatility. When is there never? Scattered bouts of moral hazard and patchy conviction across most sectors. Dodger, Fisher, German bite. Interest rates held steady, likely lower. Inflation fading to moderate later. Central banks maintaining a data-dependent drizzle. Wind direction variable. Confidence occasional. 40s, Cromarty, Forth and Tyne. Fog on the Tyne. Equities calm to slightly firmer. Expect occasional Expect occasional scattered AI hype later in the week. Outlook for Wednesday, the 15th of October. Algorithmic gusts, followed by nothing. Dover, White, Portland and Plymouth. Consumer spending, good, 6%. Optimism, retail optimism, moderate. Credit currents light to moderate. Veering uncertain by afternoon. Caution advised for retailers navigating post-holiday shallows. Biscay, caution advised for those invested in stocks and commodities trading 50% greater than the 1 year moving average. Silver, last seen at twice the 1 year moving average. Biscay, tech high, macro direction, short term none. Funds drifting aimlessly with gentle quantitative breezes. outlook, gradual loosening. Squalls expected Friday. Trafalgar. Commodities calm, gold glittering, oil on his ass. Variable with a chance of calamity. Oh my God. I'm done. The general synopsis, the macroclimate remains becalmed. Mariners report with increasing frequency. Notions and potions, but mostly concern for an emerging signs seen across all shipping lanes of a phenomena called bubble. Beware gusts of hysteria. Forecasts for the next period, mostly ironic, occasionally tragic, visibility uncertain. Ladies and gentlemen, that concludes the market forecast. Good night, and may your leverage remain light. This is the Acid Capitalist. I'm signing off. I hope we've done this in 25. I hope this is half an hour. Bisous from St. Bas. Take care. Good night, brothers and sisters.